Hey guys, good afternoon everyone. I'm Harshit from Kepler. Welcome back to our YouTube channel. Welcome back to our YouTube video as well. I hope you have a fantastic weekend. Saturday, Sundays, markets are obviously off. So, in today's session, we are going to continue our all about trading psychology series, which we have started way back, like I guess so 2 or 3 weeks back ago. So here is part 3, part 1, and part 2 we have rolled out last weekend and prior to that weekend. And let's begin. Let's begin with the pending or remaining points. Yeah. So 26th point: avoid overconfidence, euphoria, and self-sabotage. Once you start winning, देखिए ये बहुत ज्यादा इंपॉर्टेंट. अगर आपने let's say you have learned trading and you have some setup strategy, all of that, and now you are feeling confident, okay, I will trade and all of that. You have tested sample sizes, you have worked in sample sizes for a specific setup or strategy. But the thing is, when you start making money, just make sure you don't be overconfident and be humble and grounded. Because see, if market can give you 1 crore in a trade, market has the same power to take back that 1 crore in a single trade, and that's the that's why market is so superior. And it's like king. Market is the king in itself. No one is king in the market. Market is king in itself. So make sure you are just stay calm, just stay confident, and don't go mad like after winning 100 200 trades. No, you have to be confident, because we want to build sustainable trading business, sustainable trading company over here, right? So obviously you have to be calm, confident, be grounded, be humble, keep learning, keep being flexible and adaptable and all of that. Next point: winning and consistency is a state of mind. This is super important. See, if you want to if you want to be something, then your mindset, your attitude must be of winning. It's applicable for everything. You have to be engineer, winning. You have to be doctor, winning. You want to be a army officer, winning. No matter what the thing is, what the concept is, your mindset and your attitude is what really matters. Obviously, talent, skills, competencies is a different story, but winning attitude and consistency is also important. You have to stay, you have to be there on a daily basis in markets from 9:15 to 3:30, no matter you trade or you don't trade. That's a different story. You have to just observe the market, see what the heck is going and what the heck is going in the market. Basically, you trade, you don't trade, that's a different story, but just make sure you be consistent and persistent with your trading and markets as in general. Next, be in the flow while trading the markets and make yourself available. This is super important. See, let's say market open at 9:15 and closes at 3:30. So this 6 hour ka time slot is what we call as trading zone, because prices are fluctuating every single second from 9:15 to 3:30. So this is basically a trading zone. You have to go deeply in this zone from 9:15 to 3:30. And let's say you don't know anything, but at least you can see what market is giving to you, or I mean, just make yourself available if market is giving some sort of opportunity. Correct. Just be in the zone. Next, be in the flow while trading the markets. No, sorry. Create a state of mind which is not affected by the market's behavior. It's very important. See, we can't control market, but we can control our behavior and our mind. Market, let's say, is good and also bad. 50-50% probability. Now let's say market is good with you, which means that market is giving you money and making your profits. You are happy, and let's say market takes some money from you. You are sad. No, it's not like this. No matter what market is doing, you have to be stable in your mind. Your state of mind should be neutral. If you are making profits, well, if you are losing or your stop loss is hitting, Okay, it's all stop loss is equal to happy loss, correct? So just be in a neutral state of mind. 4 things to not fear: being wrong, losing, missing out, and leaving money on the table. This is also super important. See, being wrong, which means that you will not be 100% right always. The probability of you being right is always 50%. So consider 50%. There is always a 50% probability you being right and you being wrong. So this is a fact. You have to accept the fact. Now, that's a different story. If you have some strategy set up, edge over the markets, your probability of being right goes to 60, 70, 80%, not more than that. 90, 95% is totally bullshit. No one is 90% right always. Missing, losing. Yeah. See, the probability in trading is always 50-50. Either you will lose or either you will win. Which means either you will make money or either you will lose money. If you fear losing, then how will you enjoy winning, or how will you participate in the first place? So just accept the fact. See, acceptance gives you courage and confidence. Accept the fact that 50-50 is the probability of winning and losing. Missing out is also important. Let's say market is indicating or signaling you something. Okay, initiate a trade fast, and you have to be neutral, and you don't have to fear missing out. Oh, what will happen if I miss out this opportunity? No. If you fear, that fear of missing out is very dangerous. I'm telling you. You will trade randomly and you will trade impulsively, aggressively. No, correct. Leaving money on the table. This is also important. Let's say I initiate a trade and let's say I buy some XYZ stock at 100. It went up until 120. I make 20 and I exit. And then this stock goes at 220 or 200 or something. So this is called as leaving money on a table. So for this, you have to work on a specific system, specific process. Um, in the sense, meaning you have to figure out your stop losses, entry, exit, target prices, all of that. Target price 1, 2, 3. And after target price 1 is been hit, make sure you book profits for the 50% of quantity. Target 2, 25% comes to 75%, and target 3, 100% booked. Willingness to get the right mindset is crucial. Yeah, this is also important. You have to have the dedication that okay, I will have the right mindset and I will trade in the right direction of the markets. Correct? 32. Do not perceive anything painful about the market. See how human psychology works is such that if something good happens with you, you consider that specific thing as great or good. If the same thing gives you pain or something bad or wrong happens with you, the same thing you will say it's bad or wrong. No. I am against this, and market works completely opposite to this. As I mentioned earlier as well, meaning you take everything in this world or in this universe, education, business, job, whatever, love, whatever. The probability is always 50-50 of something being right or something being wrong. And also it depends on how you perceive or how you experience that specific thing. For example, let's say I am an engineering student and I have to study in a specific university for 4 years. Now, let's say for that 4 years, I don't get relevant support, teaching, guidelines, placement, guidance, all of that in that engineering college. My experience with engineering will be horrible, will be terrible. On the other hand, if let's say someone from an IIT is also pursuing engineering for the 4 years, and his or her experience is great because IIT is a prestigious university, prestigious college. So obviously, the probability of things going right of that specific student is higher than me. because IIT offers everything: teaching, practical knowledge, theoretical knowledge, support, placements, and all of that. So what's wrong in this? Like, human psychology works as if 50% will go right, 50% will go wrong. So just make sure whatever you experience, you don't assume or conclude, okay, this is right, this is wrong, this is good, this is bad. No, it's your experience which is good or bad. It's you which is good or bad. Correct? It's your experience basically. It's your human psychology which is indicating you whether it's good or bad based on your past experiences. Next, if you are not in a flow, do not trade and get back. See, I have mentioned this earlier as well. If you are not in that zone, intense, deep zone, right from 9:15 to 3:30, then make sure you don't trade, because you will make random decisions and the probability of going wrong is all in your favor, basically. If you are not in that zone, if you are not focusing intensely on your charts and what the heck prices are doing, and you can't win. Correct? Start trading with perceiving the opportunities. Yeah, this is important. This basically means, before trading, just make sure you have a plan. If markets open over here, I will do this. Markets open below this level, I will do this. If markets open slack, I will do this, and how and when and what will be everything. So having a plan is super important. Correct? Next, learn to see and perceive opportunities in the market. Seeing opportunities and perceiving opportunities comes with a great experience, I can say. It's quite hard for traders, like new traders, as in general, to perceive opportunities and to see what market is indicating, basically, because there are a lot of factors, a lot of health factors out there, and also there are so many things, right? I mean, these influencers, YouTubers are basically just out there to sell some setup or something like that. No, I mean, market is a deep study. It's a deep subject, as if it's a medical, engineering, law, finance, whatever. It's a deep subject, basically. So it comes with an experience, expertise, and after spending a hell lot of time in the markets. So this was our today's session, and let's continue this session in the next series, basically in the next weekend as well. This is our YouTube channel which have like 1000 plus subscribers and 100 plus videos including shorts. We upload content on a daily basis over here. This is not our core business. Our core business is a different, it's completely different. We are into trading, investing, and all of that. This is basically just an initiative for you guys to understand markets and, yeah, all of that. So do like, subscribe, share, and comment down in the comment box of this video, basically what do you want next from us, like, what do you want as in general. Yeah, so that's all from my side today. Thank you, bye bye, meet you in the next session. Have a great weekend.